Hi everyone, this is the daily forecast on Eurodollar. Today's Thursday, November 18th. This video is created by Finteria Markets. Please visit our website for more information about our company. You will find many interesting tools on the website, educational materials, and online courses, as well as all information on trading conditions. We offer one of the best spreads in the market, and our spread on Eurodollar is below 0.1 pip most of the time. So let's start our analysis. I'm going to pick up the widget, which is called Currency Strength. It shows you the strongest and the weakest currencies in the market. And by combining strongest and weakest currencies, you can find new trading ideas. So first of all, let's check the situation over the last 24 hours. So this is the time frame selected by default. So here you can see that there's some outperformance behind the Japanese yen. It's the red line on the screen. You can see that Japanese yen grew by 0.52%. The commodity currencies are the weakest. So you can see that Australian dollar, it's the yellow line, and also Canadian dollar, the black line. They both fell. The Canadian dollar fell the most by 0.67%. This is mainly happening due to the falling oil prices. You see that oil prices are heading below $77. So they're falling sharply for the second day in a row. So, and of course, this is putting pressure on the commodity currencies, especially on the Canadian dollar, because it has a pretty high correlation with the oil prices. And also the same situation is happening on iron ore, copper. So basically, this also puts some pressure on the Australian dollar. The only exception is the New Zealand dollar. You can see the orange line on the chart. There was a report released on inflation expectations, and it provided some support. Let me remind you that we're waiting for the interest rate decision on November 24th, so it's next week. And this event can actually provide support to the New Zealand dollar. So that's the only developed country that is actually rising interest rates in the current environment. So let's also pay attention to the European currencies. We can see the euro and the dollar are generally stable. The US dollar is slightly weaker. The pound is slightly stronger. So let's also switch to 1 week, 5 trading days. So we can see that the pound is much stronger. It's gaining over 1%. There are 2 reasons behind this strength. The first one is much stronger employment report that was released on Tuesday. And the second reason is the better than expected CPI inflation, if you can actually say that high inflation is a good news for the economy. But anyway, it provided some support to the pound, and it generally increased the interest rate expectations for December month. And the weakest currencies are the euro. You can see that it's falling almost 1%. It's the blue line on the chart. And please pay attention that the Swiss franc is moving in tandem. So there's a high correlation between the Swiss franc and the euro. When this type of situation occurs, in my opinion, this is mainly due to interventions by the Swiss National Bank. So there's some confirmation from SNB side deposits. We can see that side deposits are ticking up. So this information is released on a weekly basis, and it means that there's a high level of interventions from the Swiss National Bank. So they actually keep their national reserves in currencies as well, including the US dollar and the euro, and especially in situations when the Swiss franc is getting very expensive, they start selling dollars or also selling the Swiss franc and buying euros, buying weak currencies. So in the current environment, I think they would be increasing their stake in euros and buying euros at the current levels. Let's also check quickly the situation on the chart. Here I have the chart. This is Euro Swiss, and you can see that we reached the lows from the previous year. So this is actually putting a lot of pressure on the Swiss National Bank. So that's the reason why they make interventions. They are trying to protect their economy, which is purely based on the export. So very expensive Swiss franc is hurting the Swiss economy. So let's get back to the website, and also, well, basically we discussed the situation. The US dollar actually lost its momentum. We can see it's still slightly stronger. It's the second strongest currency in the market, but we can actually say that so far it lost its momentum. The market focus was on the interest rates, but now it shifted to some other topics, including the risk aversion, because we saw that commodity currencies were falling yesterday and the safe haven currencies were appreciating. So we can also use the following tool, FX risk aversion. And this tool will actually show you the following situation. So it's based on the comparison between cyclical currencies, so risk currencies like Australian dollar, New Zealand dollar, Canadian dollar, and versus safe haven assets, safe haven currencies like dollar, GPY, and Swiss franc. So here we can see that on the daily level, the risk aversion was actually quite high, 80%, but so far on other timeframes, we don't see risk aversion anymore. So I think this is going to be very important if there's any further risk off sentiment in the markets. So we can quickly check the situation on the charts. So first of all, let's check the S&P index. We can see it's moving slightly higher. It's actually, I would say the situation is pretty much mixed. The Asian session was not really that positive. Most of the Asian markets fell. Japan, this is China, Korean index, those are daily charts. So Hong Kong, you can see it's also not performing that well. So there's some risk aversion in the markets. Let's see how the European session will evolve. So far, S&P futures are looking positive. They are gaining around 0.2%. So finally, let's also discuss, probably this is the most important topic in the current environment. It's the nomination of Fed's chair. So there was information yesterday, I think approximately 11. Biden initially said that he's going to make his decision Friday or during the weekend. But actually there was a new statement from the White House spokesman. And he said the decision is actually moved to before Thanksgiving. So Thanksgiving is next Thursday. So apparently there's some delay, and it's actually hard to say what's the reason of the delay, why there is so much hesitation. Actually, one of the things that we can also check, let me open the Predict website. Still on this website, you can actually see the probabilities between Jerome Powell and Lyle Brainard. So currently you see that Jerome Powell has much higher chances. But if we will check the situation, so far you see that it's really moving. At one point yesterday, the chances were around 50-50, so almost 50-50, 62 cents versus 41 cents. Now, Powell still has more likelihood to be nominated once again. So you see that situation is changing very rapidly, and let's check also 30 days. Generally, the implications are very important because both candidates are dovish. However, Brainard is actually more dovish, and she is much tougher on the financial regulation, and especially related to the climate change, banking regulation. So the initial reaction of the market can be US dollar sell-off and the stock market sell-off, because this would be, well, yeah, it's hard to say exactly what can be the reaction, but I'm actually expecting the US dollar can actually be much weaker after the nomination of Brainard and stronger in the case of nomination of Powell. And also, I think the stance and the expressions and opinions of Fed members will actually change very soon. Potentially, this will happen in December, or it can actually happen after the nomination of Fed's chair. So this is an event that is going to really impact the market. So keep a close eye on this event. So finally, I think it's time. There was a lot of talking from my side. So finally, let's switch to the charts and discuss what is happening. So once again, let's start from the daily chart. I'm going to just show you once again the overall situation. Before we were trading in this triangle for a very, very long time. So here there was a situation where we were very neutral. Then finally we had a clear breakout of the triangle, and this is the phase when we have a much stronger US dollar. So especially there was some trading between two levels, 117 approximately here, and in between 117 and 115. 115 was an important pre-pandemic level from March 2020, and this level was actually broken after some hesitation. You know, these levels are not broken very easily. And then we had another strong phase, a strong rally behind the US dollar. And here, this initial line, actually, you can see that I have now this blue channel that describes the current momentum. Before I had this line like this, so there was like a narrowing channel. The currency euro actually fell through this level very, very easily. And this level 114.28, it's also very important support line that was easily broken. So that's why I thought doesn't make sense to keep this line anymore, and I just drew it in like a parallel line. And this is more visual. I think this line is more subjective. So this just shows me visually that describes the current momentum, the current trend on this currency pair. And here from those levels, in my opinion, it's probably the Swiss National Bank that started to make interventions. I'm sorry. So right now we see that we had a really strong rebound from the current levels, and usually the trend stays intact as long as we get strong rebounds. So this is what we're seeing, and in the current environment, it's better to look for higher levels to consider shorts in the direction of the trend. So let me move to the 4-hour time frame. Here I see two more resistance lines. The first one is 113.50. So here we broke this level and we're approaching this level once again. And the next level is 114.30. It's the same level we saw it here that was easily broken before. So it's a daily level. That's why I also have it. It's much thicker line. So in my opinion, it would be better to consider shorts from higher levels, not from because we can see that the US dollar strength has faded. So in my opinion, there's some potential opportunity that we may actually move slightly higher. And I would actually I would recommend you to consider shorts below 114 or 114.30. Potentially, I don't think that we may precisely reach this level. Forex market is technical, but not always. Sometimes the market prefers to sell before a certain level. So one of the potential ideas is to consider selling from 114.20 and put the stop loss above 114.50, and then to aim for a quick buck, basically for quick take profits, which can be 30-40 pips. So currently, so far, I think the main movements will occur after nominations of the Fed chairman. So far, I expect more sideways trading. So in my opinion, you should look for depth, for opportunities to sell from higher levels in the direction of the existing trend. So that's my main recommendation. I don't recommend you to buy in the current environment, and I don't recommend to sell from the current levels either. So that's it. I hope this video was very useful. Please, if you like this video, leave a short comment below the video and also subscribe to the channel. Thank you very much for watching, and I wish you a nice day.